All right, today we're going to take a look at some of the markets, also take a look at what could happen after the FOMC in terms of Fed rate cut, and also how this plays into the traditional Wall Street sector. We've got a special guest for you today. You don't want to miss it. My name is Paul Bear. Welcome back into Tech Path. Also, I want to get going before we start and thank our sponsor, and that is Coinbase. If you are looking at getting into crypto maybe for the first time and you haven't started your account, go over to Coinbase. You can join right there very simply. Just visit Coinbase.com. You'll get a chance to go in and be on one of the most trusted places for people to buy, sell, and use crypto. Use our link down below. You're going to get a $200 in crypto when you sign up, so you can actually do your first trade over there. So today, of course, joining me is Mr. Andrew Horowitz. He comes to us from The Disciplined Investor and also Horowitz & Company, a fund manager right here in South Florida. Andrew, great to have you back.
Hey, Paul, thanks so much. And I'm going to double up on your Coinbase. I have an account there. So easy to use. Seriously.
It is easy. Yeah.
It is really easy.
Yeah. Anybody that hasn't been in crypto before, and even I have a lot of people who are, they've been in 2 or 3 bull runs and they still think Coinbase is still one of the best. So, hey, listen, if you guys want to check a little bit about Disciplined Investor, this is of course his blog and also his podcast, the longest financial podcast running in the history of podcasts. So This is the OG of podcasting when it comes to finance. Even though podcasting's only been around for, like 15 years.
I know, but I remember when the first time in 2007, when my publisher, my first book says to me, hey, you know what, I have a great idea. I said, what's that?
Yeah.
A way to promote your book would be to do a podcast. And I'm like,
what's that?
What's a podcast? What are you talking about? I have no idea what that means.
Yeah.
Quickly learned though. So yeah.
I love it.
So, yeah.
Hey, Andrew, all the news right now talking about ETFs. Obviously, we see the lineup. We get the Bloomberg guys on here. They're constantly just blown away by the success of both the Bitcoin and the Ethereum ETFs. When you look at this right now, you being a fund manager, working with a lot of high net worth individuals, what do you think? What are people asking about? And are they asking about these ETFs?
So, it's funny. It's interesting you mentioned that because you and I have talked way back about, what would happen if there is the creation of this easy access for people, which it really is. It creates a much different environment for investing in crypto than it was before, right? When they weren't these ETF versions, much more trackable, and it actually tracked appropriately, no major premiums or discounts on it. So for me, I like to stay in my lane, right? That doesn't mean I like or dislike crypto. That has nothing to do with it, right? I mean, you go to a particular doctor, you have knee pain. He's like, yeah, but I'm a dentist. I'll be happy to talk to you about it. I know a lot about this maybe because I went to medical school, but this is not a thing that we do. My clients don't ask me about Bitcoin or crypto.
Zero clients right now.
They don't come up. They don't ask me about it at all. I mean, really don't. That doesn't mean it's bad, and it doesn't mean I own personally crypto in the form of my majority holdings in Ethereum, and some Bitcoin and some other things that just you have to have some junk in there. Over the years just faded out, but I think again I take a little bit of a different stance. You and I have talked about this before.
Yes.
I think it's a great opportunity for investment. Some of the other things that it was promised to be. Maybe it will be in the future, but it's not there right now.
So let's bring it in more of a general discussion on the sense, because I think a lot of people who follow our show are looking at investing in these ETFs and they're trying to figure out, is this a good deal right now? So a lot of low cost rates right now. If you look at other ETFs on the market, which I know you guys look at all those, would you look at these and say, okay, that's a good rate. And I do like these kinds of, I won't call them marketing ploys or go-to-market strategies that a lot of these funds are doing. Is this typical of these funds to go out like this at low rates?
Yeah, these ETFs, low cost, that's the whole point of an ETF. It's a very easy structure to manage. You basically just take this pile of cash that comes in and you basically can run it like a hedge fund theoretically.
Yeah.
But these are index trackers, right? So it's not like they're saying, well, at least the ones we're talking about right now. It's not like, okay, we're going to go from Bitcoin and we're going to Ethereum and then we're going to buy, we're going to sell, we're going to do this. They are basing this on a passive investment strategy that basically will track the value and the ups and downs, the price movement of pick your name, whatever particular. So let's just stay with Bitcoin. So it stays with Bitcoin. The idea is, in fact, that their mandate is to be, okay, Bitcoin cash contract up 5% today, it should be up 5% today. The only problem is that Bitcoin trades 24/7.
Mm-hmm.
These contracts trade thinly in early pre-markets, but let's just use what they really trade. The bulk of it is the 9:30 to 4 o'clock time frame.
Mm-hmm.
I mean, they trade after hours too, but there's that weird, like if it drops overnight, you don't have the opportunity to necessarily get out of it if you want to, if you're trading it, if you're in the ETF. But it all they're doing is these are not managers that are coming up with a strategy to invest the Bitcoin. They're tracking the value of Bitcoin, and that is a lot less work, so therefore a lot less cost.
I get a lot of other asset managers on the show. We get a ton of people that are looking, and a lot of them are in traditional markets, commodities, et cetera, trading energy, et cetera. And they're starting to ask these questions, and mostly this is coming from clients who are saying, hey, yeah, I want to expose myself to crypto. Maybe the ETFs are the route here. And I'm looking at a mix. Maybe it's a 1%, a 2% of my portfolio, a 3%, whatever that might be. When you look at that, what is safe for, because you could do the same thing with risk stocks, especially in the tech sector. What would be a good exposure to some of these new innovative technologies like what we're looking at here?
I think it's a good point that you make there, by the way, that a lot of, let's go way back in the Wayback Machine and talk about blockchain, right? Yep. That we don't talk about as much anymore. That was the end all be all. There was the AI before, AI and all this stuff that is taking over markets now. I think that a lot of companies in the tech area, obviously, but also in healthcare, are using a lot of these technologies. Payment processing, maybe there are some that you could pick up stocks like a PayPal. If you want to have a stock that's just a leverage play, it could be MicroStrategy.
Sure.
So there are ways in the traditional channels markets to pick these kinds of things up. In fact, you could own BlackRock. You could own the stock of BlackRock.
Yep.
And then you're like, well, they're making money on this deal. I'll make money on it too. So there's a lot of different ways to play that and to get that exposure if you want. But if you want to be a pure play and you want to use that as part of your alts, and we have a component of our portfolios for our core, most client portfolios that is an alternative strategy. And that will be fund to funds. It may have a mix of some crypto in there. It's possible that would be inserted. It has things like also commodities. We have as a position there, but the alternative strategy is a trading strategy. It's 5% total. So if you want to look at that, that's right now. That could change.
Yeah.
But it's 5% of a portfolio. Maybe 1% of that, or 1% of the 5%. So you have 4% alts, 3.5% alts, 1.5 could be crypto theoretically, and I wouldn't have too much of a problem. But the question is, what kind of a diversification am I really getting from that? Is it really benefiting my portfolio from a downside protection standpoint? And frankly, Bitcoin's been acting like the NASDAQ lately, hasn't it?
Yep.
It's much more aligned to risk on, risk off, rather than an asset class that has zero or negative correlation. The correlation has been pretty tight. So therefore, I have to ask myself, what am I getting out of this? What am I getting from a diversification standpoint?
What do you make of what's happening with BlackRock and Tokenized Securities? They partnered with Securitize. Now they're starting to pay dividends, daily dividends, by the way, on this. And with Bitlin, there's probably going to be a handful of other projects out there with big ones. I know JP Morgan's talking about this. We're seeing pretty much all the majors getting into tokenized securities. Do you think this has a big future, a limited future? What are your thoughts there?
I think first of all, I think they'll take note of what failed miserably in the last go round with this kind of, dividend / interest paying deal that went on, heavily leveraged, nothing backing it. That was what happened before, and take what happened badly and was a real problem, and say, okay, what are we going to do different this time?
Okay, so Hester Peirce is one of the SEC commissioners. Their argument a lot within this area, especially when they talk about staking. And Ethereum is one of the core assets that is able to exist here around staking, because obviously you can do that right now if you're getting direct exposure to the asset itself. If staking were to make its way into an ETF, meaning you're getting actual yield on the asset, do you think that would change the perception of a traditional investor looking at that ETF?
Well, it's like anything else. It brings in a whole different investor, right? Now, all of a sudden, the investor that's looking for growth is one thing, but now all of a sudden you have you have an investor that's, I don't know, it doesn't have to be an older person, but somebody looking for yield for some reason inside of an IRA,
dividends,
for example. They're like, that's their play. That's what they do, right? I know investors that are like, I'm not buying a stock unless it has a yield. I'm like, okay, well, think about all what you're missing out on. He goes, I don't care. The fact is, if you look at the S&P 500, 30% of the actual return of the S&P 500 over X period of years has been the dividend yield.
Right.
Well, I'm not missing that. But I said, well, if you invest over here, you can have a lot more because there's opportunity for growth. But okay, again, that's what makes the world go round, right? That's what we can't argue this. So
that opens up more. What you're saying goes wider.
Yeah.
The bandwidth
opens it up to a wider audience.
Yep. Yeah. Which could be a big move here. I want to get into politics a little bit. Of course, having some fun here. Mr. Donald Trump was out there in Nashville talking at the Bitcoin conference, and now he's got some official crypto sneakers. This guy is the ultimate marketer.
It's unbelievable. It's unbelievable. I mean, you got like 890,000 for I think the top seat at that Bitcoin conference was like 800,000. Never sell your Bitcoin. Talking about making a national store of Bitcoin.
Yeah. Well, a strategic reserve. Yeah, strategic reserve of Bitcoin.
Is that really necessary?
What, strategic reserve?
Yeah, of Bitcoin.
Well, I don't know. Is a strategic reserve of gold necessy, or oil, or
oil? We have oil is necessary. Yes, I agree. I think that is for regulating pricing.
I think I would look at it this way: would we have had, because we had an advantage when Silicon Valley came out, and we had a strategic reserve of basically the internet, because the United States controlled it. AI most likely will play into that. I think any innovative technology, you have to have a position in globally. Otherwise, other countries are going to, at some point, going to grab it. And you just never know.
What's interesting is you would think that if the government got involved, it's not like a little fingerprint on the industry. It's a huge stamp. And that would be incredibly bullish for the majors. And we're just talking about Bitcoin because that's what Trump was talking about. Since that comment, Bitcoin has not done well.
Hey, listen, there's a couple of things happening right now with Microsoft. They are getting punched in the gut right here with another outage with Azure. These kinds of things, the CrowdStrike thing happens, Azure is down. This is a global issue. I mean, Microsoft just seems like they're just really kind of, screwing the pooch here. What's happening? And will this have a long-term effect?
So the question is, why is it out? And is it related still, by the way, to any of the CrowdStrike stuff, at all? Yep. Is there anything kind of going on with that? I don't know that answer. But what's interesting is they were riding on a high. It's like they could do nothing wrong. For a company that didn't do anything right for a long time, everybody hated, if you remember, it was like, the evil empire, right? Under Steve Ballmer and all that. Don't share your technology with them if you want to ever keep your technology. That was, the whole thing back in the day. And it's changed dramatically. There was under Sanjay, there's a whole new outlook on Microsoft. Company's done very well in the right places, did the right things. But now all of a sudden we're entering into something that's really troubling for me, actually, right? And I think that there's a real problem right now that the big have become too big, and we're relying on just a few companies for the technology to block the bad boys trying to get in. And I don't know if that's the best idea. And if in fact, having these kinds of situations where you are fully reliant, which listen, they have 99% uptime or so, right? Don't they? These clouds?
They do. They do. Most of the clouds do. Yes, they do. I think you're backing yourself into crypto though, because blockchain is a decentralized platform that essentially would, just blockchain in general, if you just look at decentralized node architecture, this is really architecture that was built in the 80s. When you look at decentralized nodes, before we started seeing cloud creation, I don't like making these kind of predictions.
Well, once we hit mass inconvenience,
that's when it will happen. And believe me,
that's where the problem's going to
happen. Yes,
they're going to pay either in court or they're going to pay on the cost of the people going,
I'm not using it.
Thanks.
Yeah,
I'm not using
I'm out. Let's talk about this whole idea of weekly inflows to small caps. Biggest one ever coming in. I listened to Tom Lee. I don't know if you listen to him. He's kind of talking about this
Tom Lee is
cycle.
very bullish. Very bullish.
Yeah. What do you think about that? He likes the small cap pivot. He likes the idea of continued upside for the NASDAQ. and also maybe even a return back into the major Mag 7. What are your thoughts?
First of all, Tom Lee likes everything, and he's very bullish on everything all the time. I think maybe he was once, maybe he was like, maybe things will slow down a little bit. Small caps. So small caps, I agree. One of the big reasons why a person like Tom Lee or the people you watch on TV will talk about small caps, they'll talk about something called the reversion to the mean or mean reversion trade. What has happened and why the small caps have done so well, in my opinion, is that you got these big mammoth companies. You got these $2, $3 trillion companies, right? When all of a sudden portfolios are scraping a little bit off, where are they putting it? Well, they're putting it in small caps. This little bit that they're taking off of the Mag 7, the big caps, is a massive amount of money, and they have to reposition it. Some fund managers have to be positioned. They have to be invested. Now they're thinking small cap, so they got to take this money. It's like the guy who lived in New York. He had a $2.5 million house. It was like 1,500 square feet, okay? He comes to Florida, he says, oh my gosh, this $1 million house is like 3,500 square feet, off from $1.3 million. We'll take it. And that's what happened. This massive amount of money that has to be repositioned. They didn't really, the valuation differential was like, okay. So that's what happened, I think, recently with small caps and why so much money was flowing into it.
So you got Meta. I know you like talking about them. This is up 8% after beating their Q2 earnings. You look at Meta and what they're doing. I don't know if you ever saw the recording or the video where Meta and NVIDIA, the two CEOs, were talking, and there seemed to be a little bit of bromance going on between the two companies. What are your thoughts about Meta as a whole, as an AI play? Everybody's saying that Llama is the one to win it.
So basically, yeah. So first of all, one of the big issues is that it's fascinating. When Meta was investing heavily in the metaverse, the stock tanked. Remember that? Now they're investing $40 billion in CapEx over a period of time. Everybody loves it. NVIDIA's moving higher on it. Everybody's excited. In terms of the Llama, in terms of AI, just to make sure everybody's clear about this, a lot of different ways that Meta can utilize the AI, right? One of the big things is going to be, of course, is what they make their bread and butter on, is figuring out what exactly does Paul Barron want to buy today? And put an ad right in front of you. It's kind of like a perfect piece of bait in front of a fish, and wiggling it right there, whether you're hungry or not, and you're just like, I got to take a bite.
There's a lot of movement, though. I think with Meta, they've done a good job on their headset product that looks like we're going to see even a more thin or reduced size glasses and headset going forward. And I think, in terms of the growth opportunity that they're trying to do, this could be a play out of it. And again, it goes back to the whole point. It's still a walled garden. I get this. I argue this with our research team all the time. But there is an opportunity here. And one of the things that Zuckerberg said, he was on record saying this. Well, we've got a couple of clips on this, but he basically said to the NVIDIA CEO that he didn't like being in these other ecosystems, and that he felt the open network model, a true, open access, was the future. Now, I don't know if he's, all of a sudden accepted religion and he's gone away from the idea of walled gardens, or what that might look like. But would that change your opinion of how Meta goes forward if they start to open things up, such as Llama, which is essentially free to build on right now?
The thought of them letting that out in the wild. I don't know why they would do that. I don't understand why they would take all the stuff they know and all the stuff they're utilizing.
It's to kill everybody else.
Well, but if they keep it to themselves, they'll kill everybody else. I mean, if they put it out there, doesn't everybody get the data? I don't know.
I would argue, because I think if you look at the revenue models, his revenue model I don't think is based on AI. I think he's building his revenue based on these headsets, the ecosystem they're going to be dealing with,
advertising,
for VR, AR, down the road. This is just a vehicle engine. It's just like anything else, almost like social media to a certain extent. And if you have OpenAI and Google and Microsoft and all of these different large language models that are building and trying to figure out a business model, and then you have one of the biggest beasts in the game say, we're just going to drop down. It's kind of like the deal with Google and Wiz, where if Google says, hey, we're going to try to build something on our own and try to kill Wiz, because Wiz is an emerging cloud security product, which I think is going to be huge. But I think that's the game. It's figure out how to do this, because what's the old terminology in these early startups like this? You either pay too much because you've overvalued it, or
Yep.
the innovator has sold too early. I love it. Let's talk about rates. The FOMC was this week. Chair Powell looked like he was giving us a little bit of some catnip there that was saying
Wink and a nod.
we could see something coming in September.
Yeah.
What's your play on this? Do you like September as the month?
I do not. I think he's the ultimate carrot pusher. He always has the carrot in front of the nose of the markets all the time. I think it would be a very big mistake of theirs to do so. I know the Bank of England dropped rates for the first time. I think it was this morning. But I still don't think we're out of the woods from an inflationary standpoint. I know they're talking about they're making a little bit of pivot. That was the big news. Hey, you know what? I think we've done a lot for inflation, but we're probably going to move to employment issues. We got to focus on that. We saw initial claims come out about 249,000 recently, and the thing that's going to be interesting about this is if, in fact, Powell does reduce rates in September. By the way, who wants rates down in September? The markets. The markets are pushing. They've been pushing him forever, right? He's not budging. If rates go down in September, we're one of the, I think, few times that before an election, which is just a couple months away, that the Fed would actually step in and do something. I think it would really a big mistake because I think Trump would be pissed off. I don't know if this really has any impact on election issues. Like, because we dropped rates during the tenure of the Democrats, that was better for something. I'm not exactly sure what the deal is with that, but I know that is not usually something that the Fed likes to do because it does become a political mess. And I think that the listeners here and the viewers need to understand something. If you've only been around investing for 10 or 15, 20 years, you know that, wow, dropping rates is great for the markets. The fact is that the reason that rates drop is there's something wrong.
Yeah.
There's a need to actually stimulate the economy. Something is out of line. And that's usually not the best when it comes to investing after a rate cut, just to let you know. So just keep that in mind.
Yeah, I mean, we've talked about this before. If you look at the historical analysis, mostly Wall Street goes down when rates go down with it.
Correct.
So that is a factor that plays into this. I think some of the risk stocks, you could look at some things like that. Some of the risk plays in crypto, many people would say, okay, maybe. One prediction for 2025. Give us one prediction for 2025.
Utilities will continue to do well. I think that you have a multitude of issues. You have lower rates, stability, and the big factor that I think people are not looking at, and you can look at it as an AI play, is that the power consumption requirements from all this stuff going on, whether that works out or not, by the way, whether any of this works out or not, it doesn't matter.
It's a good way to hedge it.
Yeah, it's great. So exactly. So if you have a need for more power consumption for, let's say, generative AI, or for even for cloud, right? For servers and rack storage farms and all this. I think utilities are going to be an interesting play moving forward.
Okay. All right, I like it. Andrew Horowitz coming over from Horowitz and Company. Make sure and check him out over there. Thank you always, Andrew, for coming on the show. We appreciate your time.
Paul, you're the best. Thank you so much.
You bet. All right, so maybe you guys are not in our Diamond Circle. Get in on that. It's our private group out there where we talk all things crypto, blockchain, innovation. And of course, the cool thing is we do additional content over there. So it's not coming in here on YouTube or the podcast. All you have to do is click the link down below to join. It's very simple. Catch me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.